I just wanted to talk about again Applovin and Unity as I always do before they actually report earnings. In a few days, Applovin is reporting tomorrow. Unity is reporting the next day. So yeah, we are pretty close to the earnings report. I'm gonna discuss the most, arguably the most critical points um, concerning the earnings reports, and I will try to be unbiased and I will try to present a broader case uh, for both of these companies. So again, let's talk about Applovin. As you can see, the stock has been down significantly over the past few weeks. It's down more than 20% since Bank of America came out with an actual bullish report rating because they indicated that the e-commerce advertising is slowing down. Uh, so that's pretty concerning for Applovin since, again, the reason behind this drop, I had been tweeting for a few months, even prior to this. I've been tweeting the fact that Applovin was basically misleading investors. I wouldn't say they were totally misleading because they didn't really say that, as soon as we open the, as soon as we have this self-serve platform, we take it in we as soon as it's in general availability, um our e-commerce numbers will go up, or we will have a lot of advertisers. I hope they did not say that, because if they did, they're gonna get, they will probably face some legal challenges. um I know there are a few law firms, going after Applovin, but I'm not sure if the reason behind those law firms going after them is not them misleading recently about the general availability of this self-serve platform, which I will talk about slightly. It's because, they argue that Applovin misled investors into believing that their data practices are clean. That was something that the short sellers had been pointing out as well. But it's still just an accusation. But yeah, that was the issue with that. So at, you know, looking at the e-commerce advertising on Applovin, I mean, many of the sources, including some of some of the reports from the investment bank analysts, as well as, some of independent reports like Fund AI and other sources, they do indicate that e-commerce revenue growth has slowed. That obviously caused a reaction because hedge funds and many investors were expecting this, self-serve to be some revolutionary, at least significant release, right? Um, it was not. Not only that it was not a revolutionary thing, it was obvious, but beyond that, I mean, let alone continuing to grow, the e-commerce revenue growth seems to have slightly slowed down. But again, there's an argument that, it has just, you know, the general availability just begun. So it could get better, and this is just the early stages. And in my opinion, that argument is reasonable. Um, but again, the markets are, I mean, emotional, and maybe, hedge funds, obviously, I've also tweeted about that. They do active channel checks and they're emotional, and they don't, especially hedge funds investing in Applovin, all their arguments are, look, this company is perfect. Gross margins are extremely high, margins are extremely high. They will grow this much, and it's all perfect, right? They have this utopia, um, or at least the idea of that utopia. And as soon as there's a small indication, or at least early result that challenges that idea, the stock takes a hit. But obviously, there's I don't think this is probably not something extremely concerning for a long-term investor. With that said, yes, I mean, the management did not really say, look, we are gonna grow as soon as we turn on the switch, as soon as we press that button. But I mean, we should be clear. The management also had this they did not say it directly, but they were saying like, oh, we are extremely, they were positive because of that, right? So they were at least implying that. So that's something to consider. But yeah, that's the entire reason why Applovin is down. Um, so the expectations, what this shows is obviously the expectations have gone down, have been, and that slowdown has been to an extent priced in, which is at least positive considering we're gonna get this earnings report, and at least we know that the expectations are low, the bar is low, right? So as far as the early indications and the data from analysts from other resources go, they are not perfect, but again, they have never been perfect. And in my opinion, the earliest indicator in ad tech, when you're looking at these companies, is not the analysts or channel checks. They are okay to an extent useful, but when Applovin had its magnificent run up, it was not the channel checks that indicated this performance increase early. It was actually the earnings report. They were quite early compared to channel checks and advertiser you know uh, opinions. Advertisers were sharing their opinions on Applovin, and they started talking about Applovin right around here, right? So they were not indicating any positive thoughts, at least majority of them. So the earnings report is absolutely the earliest form of performance indicator or whatever that you can get. So what should happen so that Applovin does not crash, right? Applovin stock does not crash. Well, the answer is unclear, but in my opinion, they should absolutely guide for revenue growth. That's clear, and they most likely will. This quarter might not be as strong, which is fine. Again, there's some of those negativities are already being priced in. But again, third quarter needs to have at least 10 to 15% quarter over quarter growth. If they guide for 5% or flat, especially considering how Q3 is, my bad, Q2 is stronger than Q1. Uh, I mean Q3 is stronger than Q2. They absolutely need to guide some growing number, um, which I think they will. I assume they will. Um, I mean, looking at sensor tower data, um, let me mhm, let me see. Yes. So, looking at this data, what we see obviously, we will talk about Unity, but for Applovin, as you can see, this is extremely positive for Applovin, and they obviously call this out. This data shows up until May, or you can call it June. Uh, so, pretty relevant data for second quarter, um, considering how, April and May, especially May, has this huge jump in the share, in monetization share or ad revenue share. This is a monetization report. This is not, from advertisers, but from developers, or at least people who monetize. Um, so considering this jump and the fact that Applovin, at least in the past, used to increase their take rates as much as they can, but although I really doubt that they are still doing it, this is actually very positive for Applovin. But we will get back to this report in a moment, right? So again, the earliest indicator is the earnings report itself, not this data or not any other data, because the sample is usually small with these datas or other concerns and other things. So the earliest and clearest indicator of growth and performance is going to be the earnings report. And again, Applovin used to increase their take rates. If they did it again, which I doubt, they probably did not, this is extremely positive for Applovin. So those two things are positive, and then obviously some of the negativity has been priced in. So that is fine. So overall picture shows that, unless they report some flat, they guide for some flat Q3 number, the stock should be fine. again, I'm all assuming I'm not I'm not a god, I just that's my personal thought. Um, Now let's get to Unity, which is looking a lot better compared to Applovin, at least in the past few months and weeks. The stock is up 5.5% today, and it's been up significantly over the past few months. Um, why is it going up? Again, the expectations are quite positive compared to Applovin, right? With Applovin, you get this negative data point that indicates that there's a slowdown in e-commerce, which is Applovin's only one and only, you know, bull case. And then with Unity, you don't have any indication that runtime data is working yet, but we will see that after the earnings report. Obviously, they will most likely talk about it. But you get these analysts and other sources of data, like again Fund AIs, or maybe other other advertisers, talking about how day 28 product was successful. They did release the day 28 product, um, I believe in May, after they reported first quarter earnings. So they have this day 28 product for hybrid, campaigns, hybrid ROAS campaigns, and it's been successful. At least that's what the sources are indicating. Um, and the stock has been going up. It's been performing quite good, but with Unity's situation is a lot more aggressive than Applovin, because Unity investors are, if you have seen the Bank of America report, um, everyone is expecting a beat and raise. There's not a single soul that expects a miss or a flat or whatever. Everyone is expecting a beat and raise. So that's why the stock is going up before earnings. Um, Although the entire market is up, but I mean, you can see what's going on. So that's really strange, right? Because I just showed you the Sensor Tower report, and if you look at it, the single biggest loser of this report is Unity, right? I mean, their market share, or at least their wallet share, drops from 4.9% to 3.8 in 2 months. And then you have Supersonic, which I if you listen to the constructor of funds podcast, you can see they are referring to Iron Source with by naming it Supersonic. It has been also down, but this is expected. But again, Unity ads being down like this, if this is accurate, this is a total disaster. Again, everyone is expecting a very significant beat. So if this was accurate, trust me, Unity stock is going back to 17 or something like that. But the accuracy of this data is questionable. Obviously, I mean, you can spot some anomalies by just looking at it, by looking at pretty much anything on this chart, but on this graph. For example, I mean, Digital Turbine being equal to Unity. Again, I mean, that's very strange on its own, or even Mintegral. But yeah, beyond that, when you look at the past few quarters, there is no growth for Unity ads, right? I mean, this is Iron Source, this is Unity ads. Although Unity has doubled, at least what they reported in their earnings. Unity ads revenue has doubled. So obviously they have been paying a lot more to the monetizers. So why is this data not showing such thing, right? There again, a few anomalies, which at the beginning I blamed maybe they have a small sample or maybe something else. But it turns out it's not the small sample. I watched the Constructor of Funds podcast with a Sensor Tower employee, and he had no clue, you know, overall. And he said that they took this data based on the earnings report of Applovin, for example, 31.6%. They looked at the earnings of Applovin, which is understandable. But again, they are not, I mean, they're not taking this from game developers or whatever, they're taking this literally from financial reports, which explains why these are the 2 quarters that that are in Q2, and this was Q1. So the contraction appears to be in Q2. Um, Again, he had no idea. He didn't even know that Unity Ads was growing and Unity Vector existed. So that was very strange. So I really doubt at least the accuracy of this report, since again their employee was clueless and this data is not really consistent with what happened in the past, and there are some anomalies. So yeah, I mean the accuracy of this data is questionable. Also, again, the analysts, they indicate that their channel checks are showing that Unity Ads is growing, and again the hedge funds as well. I mean, if this was the case, Unity software wouldn't be going up like this, right? Hedge funds have their own tools. They conduct channel checks. Analysts, again, they do the same thing. So I mean, if you look back, a year ago, the stock dropped 20% or more in a month, just a from a slowdown in growth. Unity Ad Network was flat during this period, and the stock crashed on no news. There was nothing, no indication, nothing on Unity Ads and its performance. But after a few months, we realized that the hedge funds had just been selling because the ad network was not performing that well back in the day. So yeah, they're very risk averse in that sense. So again, this wouldn't happen if this report was accurate. And again, another counter, at least another argument against that report is Tengin's own data. The data of Tenjin is indicating that Unity Ad Network is growing by ad revenue share. Again, this is monetization. Um, uh, so again, they have been growing on both iOS and Android, and yet when you look at this report, their share has been contracting even in Q1. So it contracted in Q1. So again, very, very opposite reports. Also, again, another counter argument against Sensor Tower's report, again, Q1 report of Unity itself. But also, they just posted on their LinkedIn and other platforms that Unity Ad Network has more than doubled in scale from February of last year to March of this year. So that was a clear data point. Unless they're lying, this report ends in May. I mean, they from February to May, they said Unity Ad Network grew 250%. So again, this ends in May. So very opposite reports, right? Um, so this is Unity. Everyone is expecting a beat. Every single person. So again, if they guide flat, it's gonna be terrible. If Applovin guides flat, again, it's gonna be ugly but if Unity guides flat, without any indication of ignition, or without, because everyone is expecting this runtime data, although the expectation is not that we will get a lightning strike, because the CEO has mentioned it multiple times. He said it's not going to be instant, but people are still expecting a growth again, because I mean the same thing, right? The CEO of Unity indicated multiple times that this runtime data opportunity is very bullish. So if third quarter becomes, if they guide flat for the third quarter, it's going to be ugly. It's going to be very ugly for Unity. Same for Applovin, but again, with Applovin, some of the negativity is being priced in already. So I mean, yeah, that's how I think the reaction to a flat guide would happen with Unity. Um, Now, what are my expectations, right? Again, Unity's situation is a lot more uh, leveraged than Applovin's situation, because they're a small ad network. They're building their small product, so the growth could look more aggressive in percentage terms. Um, so overall, I mean, we have discussed the different data sources and what they indicate. So overall, they've released day 28 product in May. So that was a good product. Um, yeah, I mean, there's nothing that should cause Unity to guide flat, but it's still, you know, I'm still cautious. Um, so overall, if Unity really keeps on growing, it will be great. If Applovin keeps on growing, it'll be great. I'm telling, generic stuff. But the only crucial point that I can give you that you probably do not are not aware of is, again, the earnings reports are the clearest and earliest indicators, not the advertisers themselves, at least the particular advertisers, because again, the sample size is small and all that, not the developers and the monetization side, although they do see things earlier than the advertisers. Um, it's going to be the numbers. And day 28 product of Unity requires like 2 months, um, or maybe more. I think it was 2 months of optimization, or maybe more. I'm still unsure, but you get the idea, right? I mean, the optimization period of Unity Vector is a lot higher than Applovin's Axon too, so that might cause a little lag. Um, but overall, you know, we will see what happens. So to end the video, I will give out my expectations, although I really don't need to. I think Applovin does fine. Again, I think they report a a small beat, in compared to their own consensus and compared to the expectations, and they guide, again, as not small, but let's say a few percentage points of revenue growth. But it could be 10%. I don't know, but uh, I mean, I think they will do fine. As for Unity, it's really a wild card. I really don't know. I I I think they should do fine, but I'm not sure about the third quarter. I really hope they report, at least that they guide above expectations, and they guide for significant growth. Um, but overall, again, Unity's situation is a bit more, you know, complex, because even if they do not guide for a decent growth, let's say they reported a very good Q2 and they guide flat, people know that they tend to sandbag their guidance. That's one thing, but the other thing is, again, everyone is kind of focused on this runtime data. Um, so if there are some indications of if there are some positive things coming from the earnings call about the runtime data, then that might offset some of the that might offset the flat guidance. So yeah, that's my expectation. So thank you for listening.